Hello guys, and glad to have you on board again today. There is quite a lot to unpack. Of course, the Fed has passed right now, and the thing is that I don't even know what has been said. Actually, I don't even care. It's all about, the only thing I've heard about it is that they're extending the low interest rate policy for at least 30 years. But we already knew anyway that they just cannot rise them automatically. So either they're going to be forced to, because investors will just not play this game anymore, or something will unexpectedly fuck up the speculative bubble, and the credit bubble might be bursting in the same time. So this is just the same old problems. We don't expect the Fed to rise interest rates. Either they will do this on their own and just simply not follow the guidelines, because the Fed can only set the base structure of yields. They cannot set the entire thing. If investors perceive some types of risks, then yields can just rise on top of the base structure the Fed is requiring to borrow money. But anyway, that's a topic for another day eventually. So until then, all I care about is how price responded. The response is so far pretty clear. It has been closing at the low points, gapping down today as well. Not great. USD/JPY breaking some supports, even though Euro/dollar is doing as well. So a lot of complicated stuff going on. So when things are not moving all in the same direction, means if you have radical positioning, it means you're probably not into the right position. So this is what we're going to unpack today. What can we actually do about these things? Is this an absolute bearish signal? Is this, though answering all those questions is we're going to be with today's topic. So cooling down all these stupid emotions I've seen over these post-Fed meeting era. All right, so let's go context. All right, we're going to go real quick in here. I think I'm going to go right to the conclusion. So most important things is today, okay, initial claims like every Thursday, but doesn't mean like the market, doesn't feel like the market really cares about that today. It's more about digesting the Fed and working around the supportive area we're actually dealing with. Fear and greed index is where I think the major game sets itself. Today, we might be on the verge, or I say within the next 48 hours, before the end of this week. Either we're going to step down into the below 50 area, which seems very likely regarding the momentum we have right now. So we have mature ranges, which means breakout can show up at any time. We've preceded by a bearish move. So those who trend follow knows that mature range generally gets followed through into sides that we're preceded by. So we're preceded by downside move. Mature range means normally we should be forthcoming downside breakouts. So yeah, very likely technical probabilities to the downside. The Fed was a node in which basically things could have turned out more complicated than they looked like. This is the reason why I followed my plan. I sold prior than the Fed, but with tinier position sizing, basically dividing by 2. But still, I had some signals which allowed me to lower my risk taking, lower the stop loss, and therefore I had money to reinvest, though I did it even though acknowledging the possible risks of this Fed to eventually fuck me up once again. But I just can't do these things. I just cannot say, all right, Fed could fuck me up, though I'm not trading. This is not how I do. My job is at some point, I know the Fed can fuck me up, so I assess that into the risk management, but I still have to trade, okay? I just cannot trade because I think they can fuck me, though I say, you can, maybe you will, but until then I have to work my way into the market. And I have to follow my patterns no matter what. Okay, so out of correlated assets, pretty mixed feelings, of course. All of the correlated assets are pulling back to supportive areas, not yet breaking them. So don't get me wrong. If you think this is extreme bearishness right now, not yet. Maybe tomorrow we need to step grid below 50. We need to see breakdowns on the massive ranges in which we're into for quite a long period of time right now. And regarding bonds, then of course we're still sitting with this intermediate area in the middle of nowhere, and we're going to have a quick look at the 30-year bonds. So yeah, let's switch to technicals if you want to make these things quick. Okay, so SPX first, as you can see, we do have a mature structure. Let's switch back to H1 timeframe ranges. This is exactly what we've been forecasting over the latest few days. This is the signals I personally managed to deal with. Okay, bearish signals, exit patterns. So Fed, no Fed, I had no other choice but to get in. The market has failed to break, to make higher high points, so it looks like a slightly consolidation on the SPX, slightly higher high points, slightly lower low points, so I would say flat structure. So until we manage our way down, there's no actual thing to deal with. It's just, okay, you know, ranges are mature after 4 range boundaries, so first, second, third, fourth. Though yes, the range is mature. The 4th range boundary is now confirmed as it has reversed back to the support context. Okay, just imagine things on the lower time frames. Okay, so the context, I've done this. Okay, so 4 range boundaries have been validated. We're building the 5th one. That doesn't mean the market will have to break immediately. Okay, it's just 4+ means favorable structures for accumulation and breakouts. Okay, trend following, breakout, early preparation and breakout structures. Okay, we're no longer range trading. As the range matured, we get into either preparing for the next trend or doing nothing. Okay, so this is in any way an intermediate to experienced context, as these things are not the easiest one to navigate. So if you don't know how to do this, just, I mean, wait for the breakout. Until then, you're still in the range, so God damn it, just don't do anything. Okay, so as long as we don't break this area, there's no either bearishness or bullishness. It's just range trading. If you want to buy the bottom, I could understand that. It's just that at that point, this is not real smart. If you wanted to buy, this is where you wanted to do it. So now you might be risk managing, saying, all right, I have my stop losses in here, I paid for it, just like I exactly have done on the opposite direction. I sold this range boundary, the 4th one, and my stop losses have been lowered out there. So now one of us is going to be wrong, the others will be right. Who knows which one is it going to be? Actually, we both did our job, and that's what trading is all about. That's what I try to teach you out there. This is not about being right or wrong. This is just optimizing you into losing as least as possible when you're wrong and making as much possible gains when you're right. Of course, if I'm right, I'm going to have a much better exposition to the market selling this area rather than breakout trading. So of course I took a little bit of risk, but so far it's working out. So even if I get to be proven wrong, I'm not going to lose money, which is great. Okay, until then, yeah, who's going to be right, who's going to be wrong? It's a 50-50 game. As long as we're in the range, no one knows, because no one knows the future. Okay, so we'll see all about it. But the thing is, don't make mistakes. If you're selling the bottom area right now, you definitely don't get it. Okay, so first and foremost, if you want to build a structure, you need to accumulate. In order to accumulate, you need to oscillate a bit. So oscillating on the support would be totally favorable for a breakdown. But until then, that means anything that can happen will have to happen in a lower time frame. So I would say this is a 15-minute to 3-minute gang looking for 3-minute accumulation purposes into 15-minute contexts. That would be what I would do right now. So I'm waiting for the market to do something, okay? And I'm certainly not selling into supportive area. I just lowered my stop losses. That's it. Okay, so if you understand the perspective, I took some risks, a speculative risk, 3% maximum risk taking on capital for a loss. And as I reduce the stop loss, this risk is lowered. I was previously risking approximately 3%. That was slightly higher than that, actually, just 3.5%. But now it's been reduced down to 1%. Okay, so as I'm now risking 1% means I have an available 2.5 share of risk to invest in the market. And that's exactly what I intend to do, but I need favorable structures to do so. And until then, I'm just going to wait. Okay, so nothing to do for me, but just reducing my risk taking, allowing some cash to be available for some further opportunities, accumulations, breakout, all the things that may show up in mature ranges. Okay. Until then, patience is required. Let's have a quick look at whatever happens in Europe. Because of course in here I would say that regarding what's happening right now, as you can see, it's pretty hesitating. We do have a downside gap, but the market doesn't want to actually transform that. We do go out of a squeezing pattern, which means things can turn out to be noisy out there. So my personal assessment was trading this 3rd range boundary, which means now it's reached that validation and we're looking for confirmation within the next few hours. So if it gets confirmed, then I'll be fine. As long as it isn't, my stop losses are still there. I'm not putting my stop losses at break even until we actually confirm. So when it gets confirmed, I'll lower the stop losses once again, have some more cash available for some more downside trades, accumulations, whatever. Until then, this is definitely not neither bearish or bullish. It's just absolutely fucking neutral. And people need to get to understand these things, okay? It's just that, yeah, bears have settled the score, but that's definitely just one thing, okay? We need a lot more to come. If this was already the end of it, then of course bulls could eventually take over and take down my stop losses. So I need to have proof that the bulls are surrendering to some lower valuations. Until then, I don't know anything about it, okay? So it's not the appropriate time to go crazy bearish. Same thing happens to me in the VIX, okay? The VIX is seriously gapping up. And the thing is that this have multiple implications and possible forecasts. The first one would be, okay, it's just an intermediate consolidation just like we had in here, and we're going to go for some much more volatility. Step below 50% into the fear and greed, and probably getting immediately, in just a few days, right to fear levels or eventually extreme fear. That could lead us to reaching out this resistant context area, something closer to 55, okay? But not necessarily the end of the world. High low point, then building lower high point, and then later on we would just set ourselves into the intermediate area, spending some time. And like I said, as time goes on, things will get better because we're printing money, and if things don't deteriorate further, at some point we're going to cross the limit in which it will worth it to invest. It's just that I think right now people have just been anticipating that money will be free forever and people will get in the market, and even if things were looking pretty bad, people will still want it. So that has been absolute speculative behavior, very dangerous, I think. In order to invest, truly rationally speaking, it was really all about buying the dip. Yes, of course, because buying coronavirus with a 30% discount definitely was a thing to do. But then later on, buying new historical highs, all of that shit was just absolute crap and crappy type of investment. So that's definitely not how to do things. So if visibility shows up and if money printers keeps on rolling and go brrr, then in that perspective, eventually, yes, at some point prices may be turning quite attractive, but definitely not right now. Anyway, until then, either price drops or price stagnate and valuations catch up on us. That's the only way in which I think investment can be done. So yeah, patience or price drops, which means two options to me. Yeah, this is the patient option, the range, the VIX. This is the flash crash option. Okay, something ugly shows up. I don't know what. We're getting closer to the election. Things will go stupid. I don't know. Just imagine Donald Trump takes a bullet in the head. Those things can happen. I know. You think nothing can happen. I can tell you that very stupid stuff can happen in these times. So a lot of unpredictable stuff can show up. Until then, USD/JPY is fairly weak. So yeah, I've talked about the structure. You know all about it. So you know a flash crash or any absolutely unexpected stuff can show up and totally fuck up asset prices in a very short period of time. Though I get prepared for it, I totally am, but I'm not necessarily going to bet on these things, okay? It's just that until then, my personal stance is things can just be neutral, and if you have a true radical positioning versus them, then that simply isn't going to work out, okay? My real personal assessment is that it's all about this thing, the 4-hour ranges, okay, for the 4-hour big structure, in which my personal assessment is just look at how we dealt with the moving average back then, which just oscillated a bit before crossing it like it was nothing, okay? I believe that we're going to do the exact same thing in the opposite direction. We're oscillating a bit, okay? We're eventually going to have a first workout of this, but I think it's just going to be flat. And as we get into these areas, yeah, I'm probably going to go bearish just because we failed to sustain prices out there. And I suspect this is where things will actually get to matter. The downside volatility boundaries and all of these areas in which we first and initially get to cross this thing. So yeah, I would say below 3,000 is the area in which I'll start limiting my bearish exposition and eventually start looking at some bullish entries on specific assets, of course, and with signals, okay? So I'm not going to blindly just buy the shit, okay? But that is my plan. So until then, I suspect that whoever has a too radical opinion is just going to be proven wrong. So just embrace these things. This is the reason why I'm recording this thing today, just to cool down some of the emotional behaviors I get to see recently. So I think we've got more than enough things to switch to conclusion right now. Oh, sorry, no, we need to go 30-year bonds first. So as you can see, 30-year bonds, we're going to go daily in here. Definitely every smart investor has seen this trend line. We all know that trend lines in mid-range area very less likely going to work their way, but that doesn't mean we're necessarily going to go aggressive. Okay, it means that if these things break down, we know that the range boundary will probably be there because we got it in a 1-to-1 ratio. So that's the thing we know. Bullish moving average going out there. So yeah, there's very likely possibility that this area, previous market top as well, is going to be the bottom range. So I don't think that smart investors will get to buy into obligation contracts anytime soon. I think this is the area in which it will eventually make a little bit of sense. Until then, I don't know. Okay, I set myself still being bearish on this contract since my previous entry out there. It was out there if my memory's right. So yeah, I'm waiting right now. This is the area in which I'll start locking on my gains. Until then, I don't deal with intermediate range price. Remember that this is the dome zone area to me. This is really the price area in which all the DOMs are making the forecast on rebounds or crash or whatever. I let them deal with the uninteresting prices. Okay, all I care about is when and if and when we go out there, and if we do, I'm gonna make money. When is just an invariable I don't give a shit about. Okay, all right, until then, I think we do now have enough information to get conclusion. Okay, so if I sum up the core information, whether this is USD/JPY being suggesting some structures might be totally unpredictably fucking up everything right now and absolutely crashing price into a very short period of time. I've already talked about it. I'm not going to do it again. So be prepared for it. What is the best preparation for it? Being covered. So if you actually want to profit from the downside moves, means you're really experienced, because you're going to have to deal with trend following and very tough range management in the same time, because of course central banks are totally fucking the range structures right now, and specifically in the US where the printer is going absolutely crazy. So if you think this is granted to the downside, you definitely get it wrong. I think the best we can expect right now is neutral, but we also know that there has been some significant risk taking on some valuations, and if anything goes unexpected, all of those guys can just be totally wrecked in one absolutely crazy structure. I suspect flash crash or whatever, but absolute surge in price, lots of margin calls, people totally wrecked. And I suspect if this happens, the smart money will be ready to buy that, because I know all the smart money investors I have connections with, we're all doing the same thing. We all have cash and we're all waiting for an opportunity. So opportunity comes from mature ranges or appropriate price. And you really need to understand that, because that's the best way I could teach you things right now. The most appropriate stance is to be as out of the market as possible, either waiting for information or waiting for opportunity. I think I couldn't say any better than that. This is my personal stance right now. I'm waiting for further downside, for further information, mature ranges that I can eventually start buying the dips. Until then, this stupid V-shaped recovery that makes absolutely no sense, but crazy speculation on 10 assets just doesn't nearly make any sense for a smart investor. So yeah, smart money, just like I said, is gambling on the NASDAQ to Dow Jones ratio. So they don't nearly give a shit if we go high or if we go low. They all know that they're just going to try making a little bit of money in a range. All I've seen recently suggests range is the most probable structure. We've gone fairly high, which means we can either fall off the cliff very rapidly, which will create opportunities, or we can just neutralize the shit we've created and just waiting for the printing money to catch up on reality. And if that's their thing, at some point, even if we are fairly overpriced today, regarding the pace at which we're actually printing might not be the case in 2 quarters. Eventually, 2 quarters from now, if things don't deteriorate any further, the current prices might be worth it. So I'm willing to pay these prices, but just not right now. Unless we do have dips, unexpected fucking catalyst, whatever, opportunity or patience. All right, until then, those who want to profit from downside must know that this is a highly speculative stuff. And you must not try to make a lot of money out of this. It's just trying to make a little bit of gamble money that we can buy with on later on, okay? Until then, if you don't know how to do this, just fucking wait. All right, bye guys.